One of the most common questions folks will ask their coin shop is whether they should spend their hard-earned money on silver or gold. Now today we'll go over one coin shop's thoughts about how they approach the issue, and also the best and worst times to buy gold and silver. Make sure you stay tuned. YouTube, what's shaking? Got a brand new episode of the Silver and Gold Stack Attack for you today. I'm still fighting that cold in the sinuses, but it is what it is. Now, if you're new to the channel, I'd like to take a second to say welcome. And to everyone else, a big thank you for being here to check out the latest video. And of course, for all the amazing support. You guys are part of the best damn community here on YouTube. And I can't thank you enough for helping the channel grow. Now, today I'm going to go over how an LCS answered the silver or gold question. So let's go ahead and roll it. One of the most common questions an LCS gets from its customers is whether they should buy gold or silver. And let's face it, you can find good arguments for owning either one of them because gold and silver prices tend to move in the same direction on any given day. And that's with silver being more volatile, of course. Now, according to this coin shop, one of the best ways to evaluate the prospects of silver versus gold is by looking at the gold to silver ratio. So as you can see by the chart I just showed, as of today's date, the GSR stands at an 83.61 to 1 ratio, which is high. But it's not the highest it's ever been. Because if we go back in time to 2011, we can see that the GSR has just continued to increase the gap since then. At that time, silver had reached nearly, $50 an ounce, and the ratio bottomed at just under 40 to 1. Now, the ratio topped out in 2020 at almost 120 to 1. Ridiculous. And today, as we've seen, it stands at that 83 to 1 ratio pretty much. Now, while the ratio has fallen, it remains well above some historical benchmarks. The average over the past 3 decades is about 60 to 1, but over the last 80 years, it was under 40 to 1. By just about any measure, silver looks cheap relative to gold. And this dealer believes silver will do some catching up in the years ahead, but history doesn't necessarily have to repeat itself. We're in some really odd times these days, and some advisors are standing their ground, believing that gold will outperform silver. Now, one of the primary arguments is that gold is more of a monetary metal. It's held by central banks around the world, and they believe gold will shine brightest in a monetary crisis. Another argument is that silver is more of an industrial metal, and prices could suffer during an economic contraction. Now, this dealer also advised that he believes silver deserves some love as a monetary metal as well, because he thinks that notion has been reinforced in recent years as confidence in the dollar has declined and demand for both gold and silver has surged in response. Now, he went on to say that silver has been used as money more often than gold throughout history, and populations around the world still think of the metal as a good hedge against inflation. Also, silver is the metal favored by a good portion of preppers, who are concerned with a total economic breakdown. He considers silver's broad and still growing industrial uses as bullish for the metal. And new applications in solar, high-tech, and healthcare are being developed as we go. Now, these applications in manufacturing provide a baseline for growing demand, and that's in addition to investment demand. And here's something important to remember when it comes to silver. Industrial silver in myriad products is consumed and not recycled, whereas with gold, it's rarely consumed out of existence. As gold is dug out of the ground, the total above-ground supply continues to build. So in a nutshell, the dealer's suggestion to longer-term investors who just want a recommendation as to which metal will outperform, he says to roll with silver. But it's important to understand that silver is more volatile, and if volatility is too uncomfortable, gold might be a better fit for those folks. Gold also has some practical advantages over silver in terms of being able to store more value by taking up less space, a lot less space, and it's easier to transport. But both metals can be expected to perform well as the dollar continues to fade in this age of inflation and uncertainty. So when is the best time to buy gold? Well, obviously if you're stacking it when it's the cheapest, duh. But is there a quote-unquote best time to buy? Well, according to Chief Market Strategist Joe Cavatoni, his thinking is that due to rising volatility in the market, investors are going to look for safe haven assets, and gold does qualify for that. He also said if you look at gold's performance historically, it's the kind of asset that should perform well through uncertainty, as it's done in 5 out of the last 7 recessions. Now, additionally, some experts believe that certain times of the year are actually better for buying gold. Seasonally, gold generally offers the best buying opportunities in the late summer or early fall, says Carly Garner. She's a futures and options broker and strategist at DeCarly Trading. But when should you not buy gold? Well, while gold does have some great benefits, there are times where it may not be the best fit. For one, though it's possible you can profit from buying gold, long-term gains may not be the primary objective. Now, most investors are more likely to get value from the gold they purchase as a hedge or to diversify their holdings rather than seek profits. And that's because from an investor perspective, gold underperforms when compared to equities. And that's according to Robert Johnson, who's a professor of finance at Creighton University. Now, simply put, he says, one should never consider investing in gold, particularly if you have a long hold mentality, as the long-term returns are far below that of equities. So count him as one of those who would rather put his money elsewhere, and that if you do invest in gold, you should only invest a small amount of your portfolio, no more than 5 to 10%. I guarantee you some of us are much higher than that. But you don't want to put more than 5 or 10% into commodities like gold, so you can reap the benefits of it as a store of value while also leaving space for your money to grow in traditional assets. Now, when's the best time to buy silver? Well, manufacturing demand factors really heavily into the price. We know this. So it stands to reason that it's wise to invest in silver when you can anticipate demand will remain strong or increase. Now, according to Howard Crosby, who is a founder and executive director of a commodity mining company, he suggests the market demand for silver is likely to remain robust. And that's a positive for silver stackers. Crosby goes on to say that silver has undergone a remarkable transformation over the last 25 years. And if the current trend continues unabated, demand for silver in the industrial sector is likely to grow dramatically. And because of the unique properties of silver, it's being consumed in larger quantities in solar panels, electronic devices, cell phones, water purification systems, and the list goes on. It's the most conductive of all metals. So the move toward ever-increasing electrification across society is certain to demand more silver, he says. But when should you not buy silver? Well, analysts at Morgan Stanley, and take that with a grain of salt, they suggest that silver prices can be 2 to 3 times more volatile than gold. So you might steer clear of silver if your risk tolerance is very low. And while buying the dip may make some sense if the industrial demand for silver is increasing, may not be best when production demand is low. We saw that during COVID. I mean, manufacturing plants were shut down, demand for silver went down, price went down. Also, you might not want to buy physical silver if you're anticipating needing your money quickly. That's because physical silver is, well, it might not be immediately liquid the same way that gold can be. It takes time to sell, and the large volume of the metal can lead to extra costs like storage, insurance fees, yada, yada, yada. All right. There you have it. Now, I've taken some points of view from an LCS, a chief strategist, a futures and options broker, a professor from Creighton University, an executive director of a mining company, an analyst from Morgan Stanley to help come up with this video. But that leads me to this. And for you newer stackers, always do your own due diligence before spending your hard-earned money on metals. Take everything you see, read, and hear with a grain of salt. And that definitely includes here on YouTube. Do your own thing based on your research. Have a plan, have an exit strategy, and don't be afraid to modify either one of those along the way as life changes. This is part of your future that you're building. We have to be careful how we go about it. But hey, be sure to leave a comment down below and let me know your thoughts. I love going through them, so make sure you sound off. That's going to wrap it up for this episode of the Silver and Gold Stack Attack. And if you made it this far, well, kudos to you. I'll definitely catch up with you in the next episode. But in the meantime, you know what's up!
What do you want to do with your life?
Damn right. Get stacked. Stay safe and be well, everyone. I am out. of cold medicine. Coin show this weekend. Can't wait. Peace.
You're still here? It's over. Go home. Go.